It's been one heck of a couple of weeks as the stock market has been tumbling, along with some of YouTube's finest and wisest financial gurus telling us that it's all downhill from here, or in their words, it's over. And while yes, it can certainly be scary if you're a newer investor, don't panic, just listen up now. There are plenty of opportunities out there to capitalize on. Matter of fact, we're going to cover 3 dividend stock opportunities now. So naturally, I was feeling quite squirmish over the past few days, but not because I was afraid of the market actually crashing, but rather because buying on a Tuesday only to see the stocks I bought falter more on a Wednesday to then buy again and then see those very same stocks go even further down on a Thursday? Come on. I mean, discounted stock opportunities galore, and of course, no one can time the stock market perfectly, so I just went ahead to dollar cost in and really take advantage of each and every day's worth of panic, to which I really owe all of you a massive thank you for panicking. Anyhow, if you're a bit late to the game or perhaps didn't get to go shopping on a little bit of a shopping spree just yet, there are still deals out there like Starbucks, ticker symbol SBUX, which has certainly been just taking a beating as of late, thanks to geopolitical conditions that have disrupted the company's business and moreover, just overall consumer sentiment around spending freely, especially on a luxury good like a mocha choca frappe latte. But that all means we now get Starbucks down from a high earlier this year of almost $100 per share, now trading for just $87 per share, which is now just in fact below that 52-week low range. But if we zoom out here, it's the magic of Starbucks that gets me, almost 200% worth of appreciation over the last decade. And personally, I think there's just plenty more growth in terms of building out their coffee empire in regions not yet really graced by the presence of Starbucks on a global front. That said, analysts are in fact bullish on Starbucks, predicting a share price to climb up to $107.22 per share. That's roughly 22% worth of upside. And until then, as a shareholder, you're going to be able to enjoy a solid 2.59% dividend yield that's already been on a dividend streak over the last 13 years and just continues to grow at an average rate here of roughly 17% year over year. Now, investors, I'm going to dive into 2 more hot dividend stock opportunities just like Starbucks with you. But before I do, I want you to actually go ahead at bare minimum take some action here right now and joining me on this financial freedom journey by subscribing to the channel. Being a part of this journey will give you all the latest insights and stock ideas as they come. Moreover, tap on that thumbs up button for me just to let me know that this is the content you're getting value from and want more of, so then I'll just keep on at it for you. With that, next up, I want to talk about Visa, ticker symbol V, which has been sliding recently upon scares of dreadful earnings, to which the company surprised many, coming in with much stronger than expected earnings. Now, we see Visa ticking back up, and right now we actually still have it down from earlier highs this year of $274 per share, which may be a solid time now for you to actually at least take a little bit of a nibble, given if we zoom out here, we see the power of Visa with 483% worth of share price appreciation. And right now, analysts are forecasting some serious gains, coming up to $310.93 per share. It's about 13% worth of upside. And with this smaller dividend yield at just 0.76%, it's just one heck of a dividend growth investment with an average of 18% year-over-year growth that's been on a dividend streak for the last 15 years. And then we have a stock that I am watching very closely as of late, Home Depot, ticker symbol HD. Given the nature of our home improvement businesses within our economic environment right now, it just makes sense that Home Depot is actually trading on a downward spiral right now at $399 per share, which may seem expensive to some of you, but take a look at the last decade to see over 432% worth of share price appreciation at PE right now at 22.4. Now, am I personally buying right now? No. But it is now officially on my watch list and looking better and better as it slides. Analysts, however, are bullish on Home Depot, forecasting a share price to climb up to $391.41 per share. That's about 15% worth of upside. And just sitting tight with Home Depot is actually not a bad deal at all. You get a 2.65% dividend yield to enjoy. It's been very reliable over the last 36 years while growing on average by 19% year over year for the last 20 years. Now, investors, there's all 3 dividend stock opportunities for you. I want to know your thoughts on each one of those dividend stocks, so comment down below or literally just catch more insights right here and subscribe to be sure you're getting all my latest.